Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube, and it's under the channel LA Little. If you want to subscribe, you can just reach up in the right-hand corner and do so anytime I push content. You get a notification. Let me start the show off by saying, the last couple of days, I just haven't read the markets that well. We'll try to do a little bit better tonight. I've been thinking that we're getting close enough, that things were going to happen here, get some sort of a turn, but we're not getting it. And as we push lower, we're coming right into the heart of what I believe is going to be support. And so if we're going to get a turn, it's going to happen pretty soon here. Looking at the indexes today, not a huge loss, but it's on the back of a 1% losses yesterday. So you have a pretty good pushback. We'll look at that a little bit more in detail. And I want to go back in and explain again what I tried to explain last night but didn't do so well doing. And that is, what is happening with respect to the S&P 500 in a more dangerous situation starting to set up. And so I want to go back over that and talk about it a little bit more. I was kind of in a hurry last night to get this recorded. I was watching the Republican nomination process at Trump with his speech. It's a fascinating study in politics, so what's happening there. And it's kind of captivated, I think, a large part of the nation, whether you like him or not. He definitely is different than anything we've seen before. DAX was down 1%. The Nikkei still not trading. They're on vacation still. There's the S&P down 0.5% or so. Bonds up again. The dollar was a little bit higher again today, 0.37. That was pushing on the silver and gold stocks. You can see them here. And, that was pretty much a decent summary, I guess, of what was taking place. Let's take a look at the indexes. And I want to come first back to that S&P 500 and what I had talked about before with respect to the way this thing is setting up. And the potential for multiple swing point breaks on multiple time frames. So first of all, these are fairly clear, right? They're already in there. Swing point lows, you're not that far away from them. And so on the S&P 500 daily charts, you can see this area as multiple swing point on this time frame. So that one's pretty straightforward. What I was trying to allude to was what could be setting up here. And the way that the neoclassical works is, 6 bars and then you get a trend change. So if you take the last swing point low, which was here, and you can see the L, it's kind of in a mix of a lot of stuff there, so it's kind of hard to see, but it's right there. And you count up to the right. As long as you make a higher low, you keep counting bars. And so as you go up, you look to see where the 6th bar is. And last night, I think I counted the 6th bar correctly, but I missed everything else. So let's put that 6th bar in. It's right here. So that is going to be the level if we don't test it prior to 6 bars printing. And what I mean by that is the next bar, which is here, that's 1, 2, 3, 4, 5. And last night I thought there was 6, but there's actually, 5, but there's actually 6. And so we've already got 6 bars printed on this weekly time frame, which actually gives a much better chance of actually not testing that low prior to 6 bars printing. If that happens, that's a potential swing point low. After 6 bars, it actualizes, it becomes a swing point low. And if you look at the price point on it, it's 2022. So if we go back to the daily, 2022 is this bar. And so if you were to break this bar on this time frame, and you don't do it this week, you wait until next week, and you break it next week, you're breaking on multiple time frames. And it's even worse if you hold up here this week, right, in this area somewhere, and then you break on them all next week. You break that one, you break this one, and you break the one on the weekly. And if you look over here, there's not a lot to support this thing on the way down, right? As a matter of fact, the charts even show you that. Look at where the next support zone is drawn. It's way down here. There's nothing in between. And so you've got a multiple swing point break possibility next week if we don't test on the weekly this week. And that's what I was trying to show you last night. And because I do these things on the fly, I don't prepare a lot for them in the terms of, taping and retaping. I didn't come out as well, and so I wanted to come back and do it again tonight with you and make sure it was clear. You got two little support zones here. It's going to be hard to get through this area, or it should be hard to get through this area. But if it does, there's just not much in between here and the next support level, and that's where the real risk is. And if you break on multiple time frames, typically you get a fast move to the downside. If we think about this in a different way, right? We already talked about the ABCD structures that have already completed, right? Well, there's another one that's just starting now, and matter of fact, today you got the B point, and that one takes you down to that area. And so you can see the projection now is projecting down into this area. If we stall here for another couple of days, then next week pick it up, you can see what I'm trying to say to you from that perspective. As far as what happened today, you actually got some under-overs here on the IXIC. The S&P 500 doesn't have that. You got under this big bar, and actually you didn't get an under-over on the NASDAQ composite. I believe it was here. Let me go look on the NDX. It was on the NDX that I saw it. Yeah, it was on the NDX that I saw it. So on the NDX, now the NDX has been the weakest because of the big three cap technology stocks. And as I've told you, I think Monday I mentioned it Monday night. Those three are all in a bounce stage, a counter trend bounce. And so the price point here on Monday, I believe, actually Friday, the price point on that push down was 43.07. And we got to 43.01. We closed it at 43.012. So you get under, back over. That is a test of that low, and trying to get under it and can't. And it's a test into that area. It's a high volume. That's why it's an important bar. And so you get under it, you can't test. Well, you test under it and you can't get under it. It says you're going to try to bounce it. And so if you're watching something tomorrow and you want to know what's happening, concentrate on this bar and concentrate on this particular index, because that's where, if this thing's going to break down farther, it's going to be, this one's definitely going to have to break. And it's the one that's going to try and hold it up. So that's where we're at on those. Russell, I don't think there was anything interesting on this chart. And, oh yeah, actually it was. So the Russell is doing a retest regen. Now typically when you come back after more than 6 bars, you don't get that deep. Now this is not a thick bar, so it's actually doing almost a full retest regen. It's almost to the bottom of it. If this breaks along with the NASDAQ, the NDX we were just looking at, the Russell, the NDX, those are the two that are going to tell you tomorrow what's happening. So pay attention to those. If they break, then we're probably going to get a push to the downside. Now, if we do get the push to the downside and we break those swing point lows and we violate that area on the weekly on that S&P 500, then it's not going to print a swing point low. And that's actually probably a more bullish case for it. So in other words, you just keep coming down. You never print it, which you can't print on these others. For example, the Russell will be able to print 1, 2, 3, 4, 5, 6. And yeah, so the Russell probably will print one, but the others won't if the S&P sells off the rest of the week. Okay, let's look at the overseas markets, because over there you got some action again. The dollar did push up again today, but that did not help Europe. If we look at the DAX continues to push to the downside. It's under the swing point low, so it breaks the swing point low today, going back to sideways. And you got the early warning system yesterday, right, on that bullish retest regen that failed. And so you get a move here yesterday, fails to hold. Today you get the follow through and you break the swing point low. That's why you look at bearish and bullish retest regenerates. They essentially are kind of a check mark, if you will, that tells you, hey, yeah, this trend that's been doing this probably is going to do that. And then today it actually confirms that by breaking the swing point low, and that happens over and over and over. If we look at the CACs, right, the CACs got a pretty good push to the downside as well. And I didn't take a look at Switzerland. Let's see what it's doing, and yeah, it's just coming off as well. So you got there's just nothing here to hold it, right? They break. Look, Switzerland's even worse. So you get over this big swing point high, right? And then you have this one underneath, and what does it do? It blows through all of them. That's just like, you know, give it all up, right? And of course this whole move, if you pull this back, Switzerland, and you pull it back and put it on a weekly, it's just a small counter trend bounce into a bearish retest regen, and now it's starting to give it all up again. So, you know, if you want to be bullish market in Europe, this is not the one you want to pick. There's plenty of others to choose from. Let's see, what else did I want to show you tonight? Oh, I wanted to show you the other thing that was really happening today was in some of the sectors, and some of these sectors are starting to get hit, and then some of the others are starting to come back into an area that they should find support. XLB is one of them. You got swing point highs. These are all the bullish retest regens that you should be able to look at and see them hold. And again, more than 6 bars, this should hold. If it doesn't, it's really telling you something, right? That's why you look at these tests as they come back. XLE, same sort of thing, right? More than 6 bars. So you break over this swing point high, right? You don't get a test of it when you break. Now you've gone more than 6 bars. You come back to it. This should hold. If you look at the, what is the other? Oh, I don't think XLF is back to the highs yet. It's getting close. The swing point high is here. So you're getting close to it. But this one's a little different setup because it's already had one test. Probabilities go down on the second test. And they're not as high on the first test if you're not more than 6 bars. And so XLF a little bit different. XLI, this one, volume is coming out of this thing. And so one of the things that we've seen here on the last 2 pushes down off the top, volume comes out of it. Well, what does it do today? It violates that swing point high, right? Can't hold it. It was trying to hold it yesterday. It's doing a full retest regen multiple times now, if you will. Right? You tested once here, you tested again there, you tested there, tested again. Now you give it up. Volume just comes out of it. They just throw them out the, you know, it's like babies in bath water. You just throw them out. And that is not a good sign for this particular sector. And let's see, lastly, there are some that are still strong. For example, if I look at discretionary is still strong. The ones that you would think are strong. That's utilities and durables. You know, nobody wants to totally leave the market, so they shift over to the stuff that should not go down, and that, of course, pushes them up, counter trend to everything else. Currency still moving things. Dollar's up a little bit. Dollar is like almost back. I'll show the dollar right quick. It's almost back to the bearish retest regen. When you break on multiple time frames, typically that is not what you do. And so that's, again, something noteworthy. And so if I can get the chart up here for you, right here, and bring it to the weekly, that low was 24.20. Today you trade back to 24.19 and you close almost at it. Tomorrow, if this pushes back in it, it will be a retest regen even after a multiple swing point break, which typically just leads to a move to the downside. You usually get 2 to 3 bars, not a lot of pushback when it happens that way. And so typically it does this kind of thing. Well, this one's kind of holding. And again, the cases, and I was telling in the mentoring group today, I was telling them that the cases that I've seen historically that don't correspond to that rule, and that's the 90% rule, is those cases where you're already extended. And so if you take this move down and just look at the angle of descent, right, that's a pretty steep move, and especially on a currency. And so that kind of a move is pretty extended when it does its break. That makes it harder to keep going. So if the dollar does push up, that's going to hurt the commodities again. Of course, they were hurt once more today. So that's where we're at tonight. I'm going to leave it at that. As always, I thank you for joining me and ask you, take a look at what we do, see if we can help you. There's a lot of folks benefiting from what we do. All you got to do is hit the Get Started button, scroll down, see what's there, and see the kind of prices you can pay compared to anybody else, and no one else gives you neoclassical. Have yourself a great, as far as what's going to happen tomorrow, you're at the spot where it has to bounce. If it doesn't bounce here, it's worse than you think. And so we're at that juncture now. Have yourself a great night, and I'll see you next time. Good night.